Rate cuts are on everyone's mind, and we talked about the amount that they are going to cut is very important. We were leaning towards 25 basis points, but if we get some bad data that they might not be looking for, then that could really shake things up. So it's going to be very important to watch this video. Normally I'm like, hey, go spend time with family, but I wanted to make sure that you guys knew to put aside some time for today because we have signals from the SPY, we have signals from the Qs, we have signals from the dollar, we have signals from volatility, we have signals from pretty much everywhere saying something really, really bad could happen over the next week or two, and we need to be paying attention. So today we're going to get into some of that technical analysis, mainly for the SPY and the Qs, going to pop over and look at some other things as well, looking at the dollar volatility and all kinds of things. But first, I think it's important for us to note what exactly the Fed does not want from any data coming forward.
We do not seek or welcome further cooling in labor market conditions.
As you can see from that clip, they do not want to see any kind of cooling in the labor market. And that is a big deal because what do we have this week as we're seeing these signals, as we're seeing the dollar pop off, all things that we'll talk about in just a little bit. What do we have this week? Well, not only do we have a shortened trading week, but we get PMI, okay? I don't think that's gonna be the most important thing. JOLTS job openings. This is when things start to get interesting. JOLTS job openings, okay? If job openings are really, really starting to increase, that can be some form of, more job openings means potential for people to lose more jobs. And then we get initial jobless claims. Pretty much, we need to focus on anything that has to do with jobs. ADP employment change, initial jobless claims 4-week average. I mean, I guess we do get these services PMI, but if someone literally tells you the most important thing to pay attention to and what I'm paying attention to is this, and then you're sitting there going, oh, PMI is going to crash the market. I just don't think we're thinking correctly. We've said for a very long time, ever since the spring of this year, we were saying, stop thinking CPI is going to crash the market. It's not going to be CPI. It's going to be things like this on Friday, which is unemployment and non-farm payrolls. So if non-farm payrolls, remember that just got adjusted down. So not as many jobs were actually added this year as they were stating, actually the biggest revision since 2009. So that is very important to understand. These numbers can get revised. What does that tell me about this number when it does come out with the first reading? That number can get revised, aka this number can be messed with. They can produce any number they really want to cause any kind of reaction and then just revise it down later, trying to do it behind the curtain. But eventually it caught up to them and they saw that big revision. So this is a number they can mess with. This is a number that is a lot harder to mess with, and that would be the unemployment rate. Unemployment rate at 4.3. Okay, 4.3, supposed to come in at 4.2 or 4.3. So supposed to either go down or stay even. If that ticks up and we start to get some positioning from the Fed, or people start to price in the Fed maybe cutting by more than 25 basis points, we might have a recession on our hands just in the next couple of weeks. It doesn't mean it has to happen. It means that this is a time to really pay attention. And as we go over to the unrate, we know that that SOM rule has been triggered. We were talking about this a long time ago, right? We were talking about this a while ago. How we were paying attention to points. You'll see these little markings on these charts here. Now I kind of left out 2020, but we kind of see these markings, and this is when you saw that bottom in unemployment, and it started to exponentially grow. It started to exponentially grow from here, exponentially growing, right? When we see these kind of signals, this is what really leads to a downturn. We talked about this a few months ago, just talking about how unemployment can rise and what has happened with the current readings. Well, since we talked about unemployment way back in this area, what has happened? Ooh, we have seen some major upside for unemployment, and that is something to really pay attention to. The SOM rule has been triggered where you are up by more than 0.5. We're actually up almost 1% on the entire year. So that is pretty huge, and just note that this does exponentially grow. Now you can go through periods of time where you do kind of consolidate, right? You get this jump, you consolidate, and then you go again. You get this jump, you consolidate, you go again. But as this has really already been kind of breaking up and down, and then we see that surge, almost like a breakout moment for a stock, this is when you really want to pay attention. These are the things to pay attention to, right? We keep saying CPI is not going to crash the market. CPIs come in hot over and over and over again. Nothing has happened. We have not seen a crash. We have seen a bear market for a short period of time. That was overall just a bear market correction. And then we have gone to higher prices. That makes sense. If inflation is growing, the inflation of assets will be growing. It is when you go through some kind of deflationary event like a recession that we actually see lower prices in assets and in your everyday life. That is what you overall need. And I know that sounds bad, like recession. Everyone hates recession, but if you really want life to end up getting better, you have to get these stupid things out of our system that really cause these bubbles, and therefore we have to go through some of that pain to see cheaper prices at the grocery store. The only unfortunate thing with that is unemployment will rise, and that really makes me feel awful on the inside. I just have to say that. I never like the fact that I have to come on YouTube and say, hey, people are going to lose their jobs. I'm seeing friends and family right now that are talking about their connected friends and family all losing their jobs. Truck drivers losing their jobs. You know that things are getting bad when truck drivers are starting to lose their jobs, when hospitals are having to make cuts and cutting major amounts of people. That is taking place in my city right now. What do you need to pay attention to over the next week or so? This right here, unemployment. I think that's going to be very, very important, and we'll talk about that later on throughout the week. We did talk about the dollar, showing that actually crossing up. Now, we called the bottom in the dollar pretty well. What did we do to call the bottom in the dollar? And first of all, it's very important to understand the dollar bottoms first, then the SPY tops. Okay, the SPY can top later. That means this could be an extended move from the dollar, and we could still see higher prices in stocks, and then eventually that will catch up. This is the rigged behavior we pay attention to. We see people already are going to the call side, meaning what? It kind of means to me we could pretty much see a rug pull at any time. Will that be a massive rug pull? Well, that's only if cash keeps being, people keep flying in the cash. That's very important. But calling the bottom here for the dollar always bottoms, well, not always, but most of the time the dollar will bottom before the market actually tops, and I think we're seeing that right now. So I'm expecting that behavior going into next week, where we'll talk about that in a second as we get into shorter time frames as well on Sunday. So make sure you're subscribed. But the thing that we did in order to call the bottom for the dollar was we were just paying attention to our zone. We just noticed that, I'm going to actually zoom back out. We just noticed that the dollar keeps reacting from this zone. We like our zones on this channel. If I pull it even all the way back, you're going to notice what? We got even more reactions from that zone in the past. So this area is important. I thought we could go to the bottom or even cut that zone just a little bit and then see a reaction. Now, why was I thinking that? Well, I'm just paying attention to the signals, right? I'm paying attention to the signals. And if you're able to do that as a trader and kind of take out all the noise and just pay attention to the signals and really focus on what is going on in the market, you can be good at finding things like this. So this right here, we saw the divergence right here. We saw this and we said, okay, well, first of all, way back, we saw this and we said there's going to be some kind of pop. Once that rolled over, we go, okay, now look for another point of divergence. We created that another point of divergence. And then this started to curl up and I said, okay, around this area, the way the market's looking, it looks like we're going to curl over one more time to get a divergence really close to the center line. And that's exactly what happened. We ended up making that double bottom and then seeing that extend up while the market was still moving sideways and even slightly up towards the end of the day, end of the week. So we're paying attention to the right things. The dollar is bottoming. We're seeing that cross up, and these type of signals, especially on your 4 hour for the dollar, that little double bottom down there can mean a lot. And that can curl up a daily chart, and that ended up happening. So as of right now, the dollar has bottomed. Obviously, this thing can rebound back into the zone to go higher, but this is something you really have to keep your eye on. If the dollar keeps going higher and higher while stocks go higher, that adds more validity to the fact that retail is most likely FOMOing into a move before rate cuts, and you're about to see a rug pull. So that's why we have to pay attention in the next 2 weeks, and we have to pay attention to a piece of data that they could use to actually, you know, give some information, like why that rug pull is happening, right? The media has to have some reason for that rug pull to make sense. It can't just be, oh, the market's rigged. So at this point, you would pay attention to that jobs data. And I think that's very important. But as of right now, the dollar has bottomed. And as we get into the stock market here, we'll notice that the stocks are actually still heading higher towards the end of the week there, with that push higher causing an upward price while the dollar is higher, telling you that insiders may be selling and retail maybe are pushing this thing even higher. So we'll go into the shorter time frames of this later. You guys know that I am leaning towards a 2 hour cross up concept that gets some kind of trap up in this level. That way I would have a 2-hour divergence here, a daily divergence here, and we might even make a 30-minute divergence here called the golden setup for us. So if you're interested in learning how to actually trade this stuff, how to trade these little bars on a chart here and trade with these indicators, trade with the RSI, trade with the MACD, please get that course down in the description if you're looking forward to learning, because it will really help you out. The amount of emails I've received saying it has helped and it is currently on a 90% discount, it will really benefit you in the long run, even in the short run. There's pretty much every person that's taken the course has emailed me the next day and been like, hey, I've made my first trade and I'm already up 3 times what I paid for the course. So this will be the absolute last time that you can get the course for those prices. If you wanted to get the swing trading course and the technical indicators course for this kind of market, I highly encourage the technical indicators course. That is $100. The swing trading course is $50, and it will really benefit you in the long run. So really, for both the courses, you can pay $150 and you're not going to see a better deal out there. I've taken many courses. A lot of them have wasteful information. Mine is set up so every single thing you learn will be useful. Every single thing you learn, weekly ranges, divergences, MACD, we talk deeply about this. Not a lot of people talk about this MACD the way I think they should, and people need to have a greater understanding. Just thinking, oh, because I have this on my chart, I'm going to be a good trader. No, you have to understand how to use this, and that's what we try to teach you in the course. We even teach you how to manage your trade. So we'll go into the shorter time frames, but just note that I'm leaning towards some kind of push to get us a little bit of a trap, maybe up towards a weekly range, which we're going to give those out on Sunday, and then we see some kind of downturn. That's what I think could happen as far as if we get bad unemployment data, if we get bad non-farm payroll. So that's what I'm paying attention to. Why am I paying attention to it? Because the dollar just bottomed. The market is still heading higher on Friday, and we have this divergence here. So if we do go higher and then that crosses down, we have a higher likelihood of going into a negative trend. This time right here, not the best reversal signals in the world, and that led you into negative territory. Now you're a little bit closer, and you could have a weakening in momentum behind it. Okay, so this is where we really have to pay attention. If this crosses over, I think markets might be doomed, and then we have to see, is that curling back up, right? We still trade like water. We still look for what is actually happening on our charts, and we follow that. We let our indicators do a lot of the trading for us. We just click the buttons. The Qs, we notice that this is not going up towards the all-time high, and that's a very key thing, because at a lot of market tops, you will see something, which is the SPY goes and makes some kind of divergence, but the Qs can't hang. So we'll be looking for some kind of 2-hour divergence in here if we're going to see weakness. If we're going to see strength, then all of those things might even play out, and then we see that actually turn back up into positive territory, right, with some kind of cupping and handling. Okay, so we will catch moves if they are going to continue to the upside. If this isn't going to be the moment, I'm not saying it has to be. It never has to be, right? The stock market, any stock can move up or down at any time. We just pay attention to momentum to see which way that stock is leaning towards, and then help us out a little bit with some trades. As of right now, this is positive in positive territory. This can continue to go up, but if we make a 2-hour divergence and that has some major weakness in it, and we start to break through this channel, that's not going to be a good sign for the long run. So something very important, and why when you do take those courses, it's also good to join the Patreon down in the description, is the monthly ranges, right? We have monthly ranges for each stock that we do cover on this channel. We give out the monthly ranges for the SPY and the Qs for free on YouTube. So thank you so much for liking and subscribing for the free content that we put out there on YouTube, because these things can be very, very useful. If you notice, these are the ranges for August. What happened in August early on? We came out of that range. So that tells us right here, we have a 68% chance to land by the end of the month back above this yellow line right here. So that's very important. And if you know that information, it can show you, hey, these setups look good. And what setup did we use in order to say this is going to short squeeze, right? We were one of the first people talking about short squeeze. On this drop right here, we started to say, it looks like we're going to short squeeze the behavior of the dollar. What hinted us towards that? NVIDIA curling up on a daily MACD with some key divergences. We're going to show that on the shorter time frame. You see these divergences, you see that, you see it up on the RSI down here at the same time. That all led us to believe that there was going to be some kind of squeeze or some kind of big reaction from NVIDIA. What else did we use to help us with that thinking? the monthly ranges. The monthly ranges can make you feel very, very good about a trade. The weekly ranges can make you feel very, very good about a trade. Sometimes trading is a lot more about, hey, being confident in your decision, not just did I take the right play, but am I confident in that decision I made? Because as this curled up, this is the trade that I took right in here, took some NVIDIA, and then I sold all that off towards the top because I said, hey, we're getting excited above this level. I think we should consolidate. Right? Since we don't do that, I know that's the market getting overexcited, and that's most likely going to move sideways or even down before I see the next 2-hour curl up. So this can really help you out. And going forward, I highly encourage people to join the Patreon because we're going to be putting out a video discussing all of the monthly moves. Sometime in the next 48 hours, we're going to put that video out there just for Patreon members only. So thank you if you are a part of Patreon. For NVIDIA, we'll talk about this on the shorter time frame tomorrow. For now, on the daily time frame, what are we paying attention to? Hey, that daily is very close to crossing. It tells me, hey, we might be not out of the woods yet. We could curl down even further early this week, and maybe Friday is going to be good news for the market, right? We can pay attention to things like that. But for the most part, the daily MACD, if that crosses down, where is it? It's really close to the center line. If you already took the course, you know how all of this works when it's closer to the center line. You know all of this information. So thank you so much for taking the course. I hope it benefits you greatly. If you think that you're struggling a little bit, we're trying to open up one-on-ones. We're trying to really be as helpful as we can for you guys over here. My time is limited with family and all that good stuff going on. But if you can take that course, first off, we might add some one-on-ones out there. That way we can really dig into why you are not succeeding. But I haven't heard that a lot. Pretty much everyone who has taken the course has said it has benefited me greatly, and I really, really am glad that is the case. If it's ever not helpful, I'm going to change it. If I'm ever not helpful on YouTube anymore, I'm going to close down the channel because this is what the whole thing is for. It's to be helpful. So if what I'm saying in any way is not helpful to you, then please let me know because I want to make sure to be as helpful as possible. As of right now, one thing that I was playing with NVIDIA though was actually moving this line kind of up to this area and then pulling this down, okay? Pulling this down like this, really kind of taking out those highs and just saying this still could be a head and shoulders in some way. I want you to pay attention to that. This still could be a head and shoulders in some way. We could still see that extended move up. So we don't always want to be thinking crash, crash, right? We want to be also thinking just what are the signals telling me at this moment is an opportunity setting up for me. That is a better mentality to have in the market. But NVIDIA, if this curls over on that daily MACD, not a good sign. You guys know though, I'm leaning towards, hey, let's get some euphoria in this thing first and then rip it down from people with a 2-hour divergence. That's what I really think will end up happening. But if that doesn't prove to be true, then I will just trade the signals and I won't be, it'll be 2-hour divergence that curls down, curls right back up. Okay, I'm no longer in those positions. We talk about that a lot in the course. So another signal that I want to pay close attention to telling me there could be weakness in the housing market, which is sometimes a leading indicator, the housing market, the housing sector, is HGX. I like to look at HGX. I trade home builders a lot. I've notified, my stream. We go live every single day throughout the week. And I notified them, hey, I really like to trade Nail. Someone looking for, hey, what do you invest in? I go, I really like Nail, which is 3 times home builders. It's 3 times leveraged home builders ETF. It's very, very cool. It pretty much follows HGX to a T, so I do my analysis on HGX. So why would I be worried about the housing sector at this moment? Well, we do have this here, and it looks like it could be some kind of cup and handle to head higher. But if this is in any way some kind of trap and we see a little 2-hour divergence here and we experience weakness, that is not going to be a good sign. Now, why wouldn't that be a good sign to experience some kind of weakness here? Because you do have the pretty much deadness in momentum. This is really, really steep at this point. It's pretty damn close to that center line. And if that rolls over in the next week or two, you could see that extended move up. This tilts up for a brief moment and then curls right back down, confirming that daily divergence, telling you, hey, we're about to go into a negative trend with the housing sector. That can be a leading indicator of bad things to come for assets across the board. So that is something to pay attention to. So I'd highly encourage paying attention to, hey, this could be be cup and handling, but if that fails quickly, I need to react to that. And I think this is important to note and something that I would put on my watch list. This is something very, very cool that you can use with other things like the dollar bottoming to say we could be in a period where there might be some trouble and housing might give me that little bit of a hint, which is nice. You want to go for anything that can give you a little bit more of a hint, a little bit more of an edge, a little bit more of an edge. That's what you want to find with some trade setups. And another thing I wanted to talk about was gold. And if we go look at gold right now, I told you, hey, this looks like it has some weakness up here and we're starting to drop down. We're starting to get a pretty good red day there and we're about to curl over on this daily MACD. What would be the problem with curling over on this daily MACD? Well, we have flatness here for the MACD and we have a downward move still for the RSI. And if you really look back, what do we have? Downward overall, right? We have downward overall. The momentum of this to the upside has been dying off pretty quickly. We got a moment where we tried to consolidate, but if that is distributed down, we could cross over on this MACD. Now, why am I paying attention to gold? Because a lot of the time when the dollar starts to go up, gold actually starts to go down. And what do we just say about the dollar? The dollar just bottomed, which means that gold may have just topped. Now, is that going to be a long-term top? Is that going to be whatever? How is it going to react if we do crash? That is up in the air, right? These things can move a little bit differently. Okay, we can see the dollar go down and stocks crash. We can see gold go down and stocks crash. We can see gold go up and stocks crash. So what we want to do here is just say, the dollar is bottoming. That can be a bad thing for gold. So gold most likely will see some kind of downturn. But is that going to turn back up into positive territory, right? Is that going to turn back up? Really, if we just pay attention to the signals here, even though the dollar is experiencing strength and I think the gold is about to experience some weakness, I can still pay attention to the signals. If those do turn back up, that's perfectly fine. I manage my trade. That's important to note. You notice that whenever I talk about a stock, I'm always talking about what I think is the most probable, gold dropping down, but also if something were to happen where it curled back up, what am I going to do? I'm going to manage the trade. So I'm always thinking of how it could go down, but also what is the most probable, and then also how this thing could hurt me, right? I always want to pay attention to both sides. If you're someone who is very involved in the market, you know that you want to pay attention to how you can get screwed. That is something that we have in the course, how to not get screwed. And that is managing your trades. And we teach you how to do that in the course down in the description, still 90% off. But this right here, this curls down. That would mean, hey, the dollar does have something to say here. The dollar is going to start to scale up pretty quickly and gold is going to drop off for the time being. Tons of gaps in gold. So I'm not expecting it to be just a straight shot down. I think we'll probably have some chop back and forth, but we'll see what happens with these signals going forward. I just wanted to point that out to you because that is something to pay attention to. The dollar is bottoming, the market's trying to go higher, but gold looks like it might be topping out as well. So pay attention to those things. We were talking about volatility and saying if that squeeze is going to continue. First of all, we said right when this thing was popping off like crazy, great trade setup there for UVXY, great trade setup for volatility. I took that, it was very beneficial. And then we said short squeeze. Then we said if we continue to turn down and we cross over on this MACD right here, then we're going to continue to short squeeze, probably for a reaction down to the 50 or down to the 200. We get that reaction down to the 200, then we see a little bounce in volatility and we start to taper off again down to that 200. So the key thing here is the market is heading higher overall, right? We've squeezed for a while and we're seeing it test, almost go to new all-time highs. While at the same time, volatility is not breaking below this 200 just yet. If we break below that 200, you could see just a few days of more squeezing in the market and volatility dropping even lower, maybe down to 1212, and then watch out for a reaction. But we're going to go into the shorter time frames for this on Sunday, so make sure you're subscribed. Thank you so much if you already are. The key reason why you have to pay attention to volatility and why we have to pay attention to the jobs date on Friday, why the next 2 weeks can be bad, is because of this right here. This is a crash signal. So across the board, we're seeing signals that say, hey, Tuesday could be a bad day. That's what we're seeing. We're seeing next week could be bad right away, but I think this might leak into something like jobs data because that is what the Fed is overall looking for, but we get jobs data a few times throughout the week. So volatility, we have to pay attention to it. Why? It's still holding above the 200, and even if it does react below the 200, unless this 50 is able to cross down, that could just be a spike down and then end up curling back up over time. Right when everyone gets complacent down by 1212, that usually means that people are pretty complacent and the market is not expecting any volatility, which means if something is not expected, if it did happen, you can see a big reaction. So I would really be paying very close attention to volatility over the next few days. Last thing I wanted to talk about was the Dow. And the key thing for the Dow is, what does the market look like? What does NVIDIA look like right now, right? NVIDIA's down at this level, and notice that the Dow did not come and make some good structure for an overall healthier, strong move, right? Left head looking for the right shoulder. We didn't do that. We got overexcited. We'll look at this on Sunday for the shorter time frames, but the main thing to pay attention to here is downward for the MACD, downward for the RSI. So if this does curl down, there's a ton of 2-hour divergences, there's 30-minute divergences all across this. So if this does see a reaction up and just turn back down, that can lead to more weakness than last time. Last time, pretty good amount of weakness there, right? From the high up here going all the way down, about a 7% drop. So we could experience worse than that this time. And that's why I really want people to pay attention to these signals. The Dow Jones is looking like, hey, it's going to highs. Everyone's going to get euphoric. Everything's good. Everything's dandy. And then, something bad with jobs data comes out. We have to cut rates all of a sudden because unemployment is rising too high. So we have to pay attention to that data. I'm not pointing these things out to scare you. I want you to be aware of this. And if you know how I talk most of the time, I always just follow the signals. And I pay attention to times where we could see bigger downturns. This, to me, is one of those times. And that is what I really wanted to get through in this video today, with how things are shaping up with the SPY and the Qs, with how things are shaping up with the dollar, with volatility not reacting below that 200, with the housing sector possibly giving a double top, with the Dow getting overexcited to the upside, not giving the structure to be comfortable heading higher, but instead getting overzealous with a bunch of 2-hour divergences. All of these things lead me to believe there is potential, there is a good probability that we are going to see something bad in the next 1 to 2 weeks. And that's why I really want to pay attention to September 6th when we do get that jobs data. So overall, the main takeaway here is be careful, still follow your signals, take the course if you need any kind of help trading in this market, because it is getting much more complicated these days. You probably noticed that it's getting much more complicated. We have called it pretty well, I would say, and that is a good thing, right? As long as we are winning more than we are losing, that is a fantastic way to be as a trader, right? Everyone's going to experience losses, but if we manage our trades and then make the good ones, that can be really beneficial for us in the long run. So thank you so much for watching today. I really do appreciate it. I hope you do take this to heart, maybe look at some charts over the weekend, but for the most part, still set aside some time for your family, for a good meal for yourself. If you're single and you just want to play video games for 3 hours, do it, man. It is your weekend. Anything you need to do to get reloaded for the week to come, that is going to be the best thing you can do for yourself this weekend. Put yourself in a position where you are ready to win next week. And I think that is a great thing to say. Put yourself in a position that you can be successful next week. And I think that is very, very good. Put yourself in that mentality, in that patience mentality if you're unsure about something. Maybe put it in an aggressive mentality if you think that something is good and you're really reading into those signals and then managing that trade. All of that is fantastic stuff, and I just really do thank you guys for watching these videos, liking, subscribing. You guys are fantastic. Please think into looking into that course or joining the Patreon, as we are going to give out those monthly expected moves and a video around those monthly expected moves this week. So thank you guys so much. I hope you have a great weekend. I hope you guys have a blessed time. Thank you. And I hope that your family, friends, everyone is doing well. Put yourself in a position to be successful next week, and we can all start to win. Peace.